All right, so we're diving into Bitcoin predictions today.
Sounds good.
Really going to focus on early 2025.
Okay.
We've got expert predictions, market analysis,
Yeah.
trying to figure out, like, what are the key dates and the influences that could really,
Right.
change things up.
Make some waves.
Yeah, exactly.
Save the time.
So think of this as a sneak peek
I like it.
into what might be coming down the pipeline for Bitcoin.
Yeah, let's unravel it.
You ready to explore?
I am, absolutely.
Okay.
We've got some potential market-moving events in January,
Okay.
especially around, the Federal Reserve
Right.
and inflation data.
Okay.
The stuff that can, really make waves.
For sure.
Big time.
Okay, so let's start with Marcus Thielen.
Okay.
He's suggesting that the current Bitcoin rally might slow down a little bit before the FOMC meeting on January 29th.
Interesting.
So the Federal Open Market Committee, the FOMC,
Right, I see, yeah.
happens on January 29th, and he's like, oh, it might slow down before then.
Okay, so what's fascinating here is that Thielen suggests this slowdown might actually happen if the FOMC decides to hold interest rates steady.
Oh,
So if they keep them where they are,
gotcha.
And so that's interesting because when interest rates just kind of stay put,
Yeah.
some investors might actually shift away from assets that they consider riskier, like Bitcoin, and then move towards more stable options.
Like what?
Like bonds.
Huh.
And that shift, that can actually cause a dip in Bitcoin's price.
I see. I'm starting to get it.
Yeah.
But why would investors think of Bitcoin as being riskier than like bonds?
That is a fantastic question.
Yeah.
Bonds are generally seen as a lot less volatile,
Okay.
especially government bonds.
Yeah.
They offer a fixed return.
Oh.
So they're attractive during times of, economic uncertainty.
Okay.
And then Bitcoin, on the other hand, is known for its price swings, right?
Yeah, for sure.
It's, it's a newer asset class. And its value is driven by this, really complex mix of factors.
I can imagine.
Right. We've got market sentiment, technological developments, and even global economic conditions.
Wow.
So it's a lot.
So it's all about like how stable people think it is.
Exactly.
Especially when interest rates are involved.
Right.
Okay, that makes sense.
Makes sense.
And Thielen, he actually put a number on this, didn't he?
He did.
Like on this potential slowdown.
Yeah, he predicts Bitcoin could land somewhere around $97,000 to $98,000 by the end of January.
Okay, so we've got this potential dip kind of on the horizon, but there's this other thing too we need to talk about.
Oh, yeah.
Inflation data.
Right.
Specifically the Consumer Price Index, the CPI. It feels like every time that report comes out, the whole crypto world, freaks out.
Everyone's watching, everyone's paying attention.
Totally.
You're right. It has a really significant influence on Bitcoin sentiment.
Okay.
So a positive CPI report indicating rising inflation can actually spark optimism in the crypto market.
Really?
Yeah, because some investors actually see rising inflation as a sign that traditional financial systems might be struggling. And when confidence in those traditional systems wavers, they turn to Bitcoin.
As like a safe haven.
Yeah, exactly, as an alternative.
So good news for the economy, potentially bad news for Bitcoin.
Yeah, you got it.
It's kind of counterintuitive.
I know, it's interesting, right?
Yeah.
Because if inflation is cooling down,
Okay.
then it suggests the economy might be stabilizing.
Right.
And that could reduce that need to seek alternatives like Bitcoin.
Gotcha.
Now, this doesn't mean that a negative CPI automatically means doom and gloom for Bitcoin.
Right.
There are tons of other factors at play, but it does, it does increase that likelihood of a downturn, at least, in the short term.
Okay, so potentially good news for Bitcoin if inflation's up.
Right.
Potentially bad news if it's down.
Right.
And this data's coming out January 15th.
January 15th, that's right.
Okay.
And it's interesting because Thielen actually predicts that Bitcoin could see a little bump on that day.
Oh, really?
Fueled by that potential positive CPI data.
Oh, wow.
But then experience a pullback afterward, leading right into that FOMC meeting.
Oh, wow. Okay, so mark your calendars, everyone.
Seriously.
January 15th for the CPI data.
Yep.
January 29th for that FOMC meeting.
That's sure.
Okay, now speaking of the FOMC.
Yeah.
They seem to have like a really outsized influence on Bitcoin's price.
I mean, they do control interest rates.
Right.
Yeah.
It's crazy.
Yeah, the Federal Reserve's decisions, particularly around interest rates, impact virtually all financial markets.
Wow.
So think of them as setting the tone for the overall
Right.
economic landscape.
Gotcha.
And Bitcoin, being so sensitive to any kind of market changes, responds accordingly.
Okay, but wouldn't a stable interest rate environment actually be a good thing?
That's the question, right? Because if the Fed is signaling that the economy is stable, that inflation's manageable,
right?
They might feel less compelled to seek out those alternative assets like Bitcoin.
Okay.
They might perceive less risk in traditional markets, leading them to shift investments. So
stable interest rates, good for the economy, potentially bad for Bitcoin?
Yeah, in the short term anyway.
Wow, so many moving pieces.
I know, it's like this.
It's like a puzzle.
It is a puzzle.
With all these little things, interacting.
All connected.
Yeah.
But, speaking of the different perspectives, let's bring in John Glover.
Okay.
He has a much more bullish long-term outlook.
Okay.
He sees Bitcoin reaching $160,000 by late 2025 or early 2026.
$160,000.
Yeah.
That's a huge jump.
It is.
Especially compared to Thielen's,
We're cautious.
Yeah, what's driving Glover's optimism?
So Glover believes in Bitcoin's underlying value. He sees growing adoption, increasing institutional interest, and ongoing technological advancements as these key drivers of its long-term price appreciation. He also acknowledges the possibility of short-term dips, even predicting a pullback to $89,000, but expects it to rebound strongly, reaching $125,000 by the end of the first quarter.
Wow. So same dip, different long-term outlook.
Totally different outlook.
It's like they're looking at totally different time frames.
Precisely. It's important to remember that predictions come with different time horizons.
Right.
And varying levels of risk tolerance.
Okay.
So are you in it for the short-term gains? Willing to ride the waves? Or are you a long-term investor, being in its potential over time?
I see.
Your strategy and how you interpret these predictions will really depend on your own investment goals and risk appetite.
That's a really good point.
Thanks.
So, we've got these contrasting predictions.
Yeah.
But what about, the current market sentiment?
Yeah, what are people feeling?
Yeah, are they leaning towards, the bulls or the bears right now?
Well, if we look at the Crypto Fear and Greed Index, which measures, market sentiment.
Right.
It's currently sitting at 76.
76.
Deep into extreme greed territory.
Extreme greed. What does that even mean?
It suggests that there's a really high level of confidence in the Bitcoin market. People are generally feeling very bullish, expecting prices to continue to rise.
Right.
This sentiment is actually reflected in the current price. Hovering around $98,850.
Wow. It seems like they're bring on the dips, we're buying the dip.
It's one interpretation.
Yeah.
And this high level of confidence could contribute to, Bitcoin's resilience, even if we see that short-term pullback.
Okay. All right. Let's recap.
Okay.
What have we learned?
Yeah.
Okay. 2 potentially major market-moving events in January. CPI data release on the 15th, FOMC meeting on the 29th. We've also explored some contrasting predictions.
Right.
Some anticipating a short-term dip, others, super bullish on that long-term. And right now the sentiment is it's leaning towards the bulls.
It really is.
It's like we've put together this map of the Bitcoin landscape.
It's true.
For early 2025.
I like that.
But it feels like a map with a few, uncharted territories.
Of course.
It's what about the things that we can't predict?
Right. The unknowns.
Yeah, like sudden regulatory changes or unexpected shifts in the global economy,
Totally.
Like those wild cards. How could they impact Bitcoin in 2025?
That's the big question, isn't it?
Yeah.
And it's a reminder that while these predictions and these forecasts offer really valuable insights, the crypto world is constantly evolving.
Right.
New information emerges, new trends develop, and the landscape can shift super rapidly.
So the journey of Bitcoin in 2025, it's still an open book.
It is.
Full of possibilities, challenges, and maybe even a few surprises.
Absolutely. That's what makes it so fascinating.
Totally.
Stay curious, keep exploring, and most importantly, never stop learning. Thank you.
The world of crypto is dynamic,
It is.
Full of exciting developments.
It's true.
And who knows what the future holds.
Nobody knows.
Well, until next time, keep those questions coming and stay tuned.
Yeah.
As we dive deep into the world of Bitcoin and beyond.
Sounds good.
All right. See ya.
See ya.